Alibaba goals to feature primary listing in Hong Kong. Wu China traders after crackdown. Shanghai. Alibaba plans to feature a primary list in Hong Kong to its New York presence, concentrated on buyers in mainland China as it turns into the first big organization to take gain of a rule change inside the financial hub to draw high-tech Chinese firms. The e-commerce giant's pass, announced on Tuesday, comes as each Washington and Beijing sharpen scrutiny over Chinese groups' listings, and after a devastating regulatory crackdown in China left Alibaba NYSE, BABA, with a $2.8 billion great and scuppered an initial public supplying IPO of its associate Ant Group. It additionally comes in opposition to the backdrop of an audit dispute among China and the United States, which is threatening to kick out masses of Chinese companies indexed in New York. Analysts mentioned the exchange need to deliver mainland China investors less complicated access to the shares through a link to the Hong Kong bourse known as the Stock Connect. At 0358 GMT, the shares have been up 5.9% whilst the Hong Kong benchmark was up 1.5%. Being in Stock Connect manner, it is going to be greater handy for mainland Chinese buyers to sooner or later purchase the inventory, so investors are happy to step in these days and buy the inventory in Hong Kong, says Louis Zhe, coping with Director of Wealthy Securities. Already gift at the Hong Kong bourse with a secondary list in view that 2019, Alibaba stated it expects the number one list to be completed via the stop of 2022. Chief Executive Daniel Zhang mentioned the dual list might foster a wider and more varied investor base. The circulate comes after the Hong Kong Stock Exchange (HKEX) in January changed its rules to permit progressive Chinese corporations working a web or other high-tech corporation with weighted vote casting rights or variable interest entities (VI) to perform twin number one listings inside the town. Under a VI structure, a Chinese business enterprise units up an offshore entity for remote places list purposes that lets in overseas investors to buy into the inventory. Hong Kong is also the release pad for Alibaba's globalization strategy, and we're fully assured in China's economy and destiny, Alibaba's CEO Zhang mentioned in an announcement. Sweeping crackdown. Alibaba indexed at the New York Stock Exchange in September 2014, marking what became at the time the largest IPO in history. Since 2020, the agency's percentage charge has tanked in both markets, as a sweeping regulatory crackdown via Beijing has battered Chinese tech businesses. At the equal time, U.S. regulators have stepped up scrutiny of money owed of Chinese firms listed in New York, worrying more transparency. While large in scope, a center recognition of China's crackdown has been regulators seeking to amplify oversight of public services. Last 12 months, Chinese government launched a probe into ride-hailing massive Didi Global just after it listed in New York, mentioning information privateness issues. The agency later delisted and commenced preparations to listing in Hong Kong. Main analysts to interpret the probe as pushed by way of a desire on Beijing's element for data-rich groups to listing domestically. Ant Group decoupling. Alibaba additionally discovered itself in comparable crosshairs while regulators all of a sudden halted Ant Group's deliberate $37 billion IPO in Hong Kong and in Shanghai in overdue 2020. Concurrent with the declaration of its twin primary list, Alibaba stated on Tuesday in its annual economic file that several Ant Group executives had stepped down from their posts within the Alibaba partnership, a pinnacle decision-making frame for the e-commerce massive. The departures are a part of an ongoing decoupling of the fintech division from Alibaba, spurred by the botched IPO. Justin Tang, head of Asian studies at funding consultant United First Partners in Singapore, said that Alibaba's decision would raise the enterprise's shares because of its ability inclusion in Stock Connect. With regards to other tech listings of comparable kind, this will be the playbook for corporations looking to hedge against regulatory danger that Chinese agencies are dealing with on the U.S. bourses, he said. In order to interchange to a twin primary list, the HKEX stated agencies needed to have a good track document of as a minimum 2 full monetary years listed overseas, and a capitalization of as a minimum HK $40 billion, $10 billion, or a market value of at least 10 billion Hong Kong dollars plus sales of at the least 1 billion Hong Kong dollars for the maximum recent financial year. $1 equals 7.8493 Hong Kong greenbacks.